All right, thanks for joining us today on Grit Matters, and this is all about the grinding. So, Tim, you have a loan right now that's in process.
Yep.
It's going to be clear to close here in the next day or two, but this is a program I've never really heard of. It's called a bank statement program, and tell me, how does that work?
So a lot of times you have, self-employed or business owners, and they, usually have to qualify them on, 2 years tax returns, and, after writing off their expenses and everything, their bottom line number, they could be making $1 million a year, but after their expenses and such, on paper, they're showing that they're only making like $50,000, and it's obviously a struggle to try to qualify for certain properties based on your adjusted gross income. So we came up with a bank statement program, like you said, and what we do is we take 12 months of this customer's business bank statements, we add up all the deposits for 12 months.
Okay.
And take 50% of that total deposit. So add the 12 months.
So if I give $1.2 million, $100,000 a month of gross revenue.
Yep.
And then they
take 50% of that number, and that's now their qualifying income.
So $100,000 a month is $50,000, and
correct.
That's what you're putting in for the buyer to qualify.
Correct. It's fantastic. And
wow.
then the thing that surprised me is, the rates on that are comparable to everything else.
So a couple questions on this. Can you use it on a second home? Can it be an owner-occupied second home property?
You can use it on a primary, second home, and investment.
Will they let you take cash out of the property? So if I owned a property, let's say it's worth $1 million and I owe 200 grand on it, can I go pull 400 grand out or 300 grand?
You can. So you can do cash out up to 80% of the value. The one caveat to that is there's a limit, I believe, on the amount of cash. If you use it to
so
pay,
like $3 million or $4 million, they might cap it a little bit?
They cap it. If you go up to the higher loan to value, but if you go and you keep it to a lower loan to value, and we all know what loan to value is, it's, if you keep it under 60% of the appraised value, then there's no limitation on how much cash you can take out.
Okay. And then I know that Fannie Mae, I remember reading this, only limits every customer to having 10 financed properties.
Correct.
Does this have that same limitation?
That's another beauty of the program. They don't have that.
So somebody could have 15 or 16 or 18 properties. So if you're a regular customer out there and you're trying to go buy a house, and you've already got 10 properties and you're trying to get number 11, which is not going to happen with Fannie Mae or Freddie Mac, you're saying this is a loophole and it gets you into
Absolutely.
Wow.
They have, and as we have investors that, some will cap it at 20. We have some investors that have no limit.
All right, and then my last question on this, because it's such a unique program and it's really kind of interesting when you talk about it. Can you use this product? Can you use this customer out there to buy multiple properties, to do cash out, and they can continue to come back and use that same program?
100%.
Okay.
100%.
So you can have multiple loans with them. You don't have any issue with that?
Not at all. It's
wow.
fantastic.
And then what about W-2s and pay stubs and tax returns? Is that required on this type?
You don't even need that. You don't need tax returns, pay stubs, none of it. You will have to show some reserves, so you would need a couple months bank statements just to show. It's usually 6 months reserves, but other than that, you don't have to collect it.